Good afternoon, everyone. I'm Inki Cho, Senior Financial Market Strategist at Exness, and this is your weekly market outlook for January 29th, 2025. Trump's remarks have undeniably fueled the recent stock market surge. He made it clear that he demands lower interest rates and oil prices. He stressed that the current high oil prices are a significant contributor to the ongoing war in Ukraine, and he plans to pressure Saudi Arabia and OPEC to bring those prices down. Furthermore, he intends to urge the Fed to immediately reduce the interest rates if oil prices fall. This strategy is rooted in the belief that a decrease in inflation, which is a direct result of lower oil prices, will create the perfect conditions for the Fed to cut interest rates. Ultimately, this reduction is anticipated to generate favorable public sentiment toward the Trump administration. Trump's desire for lower oil prices is clearly tied to the looming threat of a resurgence in inflation, a concern that has recently gained significant attention. One-year inflation expectation has surged to 3.3%, up from 2.8% in December, marking the highest level since in nearly 9 months since May 2024. Furthermore, 5-year inflation expectations have increased from 3% to 3.2%. This uptick in inflation expectation is a direct response to the anxiety surrounding a potential inflation spike following Trump's tariff policy and reflects a proactive shift among consumers eager to purchase goods in advance to sidestep future price hikes. The market was significantly impacted last week and this week by the emergence of Chinese AI. The revelation that the development cost of an AI model named DeepSeek was under $6 million, with performance on par with the paid version of OpenAI, has intensified some worries about the dominance of the US AI industry. Currently, Nvidia commands a premium valuation of 20 times expected sales, coupled with an impressive margin of 75%. If such high efficiency can be achieved at such a fraction of the cost, serious questions will arise about Nvidia's valuation and the future of the US AI sector. Indeed, infrastructure AI stocks like Nvidia and Broadcom experienced double-digit declines, and major players like Alphabet, Microsoft, and Oracle also suffered significant drops. There are high concerns regarding the strength of the US labor market. The January Consumer Confidence Index released by the Conference Board stood at 104.1, notably below the market consensus of 105.9 and a decline from the previous month, 109.5. This drop clearly indicates a substantial decrease in expectations surrounding the US labor market. The proportion of consumers who believe that jobs are plentiful has fallen by 4.1 points from the prior month, while those who feel it is difficult to find a job have risen by 1 point. US economic data is generating mixed signals, raising critical questions about the Fed's future trajectory regarding the rate cuts. Market forecasts indicate a strong likelihood that the Fed will maintain its current interest rates during the upcoming FOMC meeting in January. For the Fed to move forward with interest rate cuts, it must see definitive signs of weakness in the labor market and a noticeable slowdown in inflation. Nonetheless, the possibility of a rate cut in March remains on the table. Looking ahead, the Fed has the opportunity to resume interest rate cuts if inflation data is favorable, labor market weaknesses are established, and there is solid confidence that Trump's trade policies will not trigger any inflationary pressures. Market volatility this week will be influenced by the Q4 performance of the Magnificent Seven stocks starting today. Microsoft and Meta are set to announce their fourth quarter earnings, and there will undoubtedly be intense questions regarding DeepSeek AI. Additionally, it is crucial to focus on their commitment to AI investment for this year. If they reaffirm their existing AI plans, we can expect market expectations to strengthen even further. Carefully review the above data before proceeding with successful trading. This is the end of the market outlook for the 29th of January 2025. I'm Inki Cho, the Senior Financial Market Strategist at Exness.